The markets took an absolute beating this week, to say the least. Obviously, the Fed rate announcement happened, and then we had some other stuff happening. Let's talk about it with Riz right now. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap webinar. And what an amazingly crazy week it was. We are blessed by the man himself, the man, the myth, the legend, Riz Memon. How are you doing this evening, my brother?
I'm good. Thanks, Chris, for having me. I hope everything's been good for you. And yeah, you kind of summed it up. It's been an amazingly eventful week. Maybe not so amazing for those that didn't have hedges in place or cash on the sidelines, but we'll get into that.
Definitely no. And, guys, I'm going to go ahead and hand the webinar over to Riz here. I'll jump in when I can, but Riz, you take it away, brother.
Awesome. Thank you. So first things first, where are we right now? Look at Chris already has the kind of the lines already drawn for us. And these are not things that he drew now. They've been on. If you've been on the previous webinar last week and the week before, you'll know these lines, these support resistance lines in yellow, you'll see have been there for weeks, if not months. And you could see that the market is pretty much respecting those, right? So the 3650, 3640 area is acting as support. For us, it's been a pretty good week, all things considered. Yes, market's down. Yes, some of our long positions that we're buying and holding, things like could be, Nvidia, so on and so forth, AMD or whatever. It ultimately, those are down. But if we have the ability to carry them and see things through, and I'm not expecting a 180, I'm not expecting to come back up and go up, 50% or 100% in the next few weeks or months. But if we have the time frame, we have the carrying capacity, and we have the conviction in them, well, they'll be fine. Not going anywhere. But as I said, we also had a pretty decent week, an amazing week in many respects because we were utilizing some puts, we were utilizing some hedges, right, via different products, but also we had our cash positions there. I have the elite members, um, I have given them a kind of a game plan, a list of companies to look into, and very systematic, strategic way of how to utilize these opportunities. So these are actually great. I've been pretty much salivating, but kind of keeping the saliva in my mouth and not drooling all over because I'm waiting for the market to eventually kind of hold up, find a floor, and then I'll be continuing to scale in. Right. To give you an example, I got in Google again, one third position, nothing extremely large, nothing overweight, but I love this company. It's an amazing company, amazing stock. Obviously, we all know and use, and I will continue to add. And in fact, if you haven't seen my latest video, I actually, for the Canadians at least, there's a recent video I just uploaded, uh, a few hours ago about how to buy, these US large cap stocks with Canadian dollars without having to convert. So check out that video, 27 minutes, you'll find it on my page. Um, Now, where are we in regards to markets? I think the 3600 area is very much acting as a support. We can definitely see that. Um, and I don't think we're gonna see a complete meltdown to 3500 just yet. But if we do get this area to break below, we can see some further downside. When we were at 3800 in the start of the week, I was like, we could definitely see 3700. I didn't expect it to happen, 3900 to 3800 to literally 3650. All in 1 week, but it happened faster than I wanted, faster than I expected, but here we are. What I will say is take a look at the RSI. We're back into oversold territory, very much a downward waterfall here. So I wouldn't be surprised if this week the market catches a bid. We get a little bit of a relief rally. I'm not saying we're going to go back up to 3900 necessarily, but I do feel like we could get a little bit of a run up as some dip buyers come in. Overall, we also have this week a lot of the Fed speakers coming in, chiming in with their 2 cents and kind of talking about, um, you know, the recent 75 basis point. uh, rate hike, which was expected. They did last week, and any kind of comments and their views on what's happening with the economy, what they're planning on doing with rates going forward, and of course, inflation as well. So, moving on to the next slide here, we have the comparison here of all the different ETFs here, sector ETFs for the S&P 500. Huge sell-off in energy, as Chris has circled here. Oil has had a very rough week, and a little bit, last couple of weeks especially, it's been kind of rolling over. We've seen oil drop to about $80 a barrel, which is good for the average consumer. It's good for prices at the pump. The only problem is that prices at the pump have remained a little bit higher than usual, simply because of kind of the tropical storms that have come in on the southern southeast front, whether it's Florida, even up here in Canada on the eastern side, Halifax, Nova Scotia area has been hit with quite one of the worst storms in many years. So oil has decreased price per barrel, but gas prices at the pump have kind of held up, especially at least over here. But everything else has been kind of just trickling down. You can see this downward slope. It's been a sell off for pretty much every asset class. Not surprising, not surprising. And it hasn't helped that the S&P 500 got clobbered because um, oil, right? We know the large oil producers, oil refineries, E&P companies like Exxon, Chevron, so on and so forth. They're part of the S&P 500, and when oil prices went down, those stocks also retreated. We got a lot of pipeline companies, et cetera, that have also pulled back. So it does not bode well for the indexes right now and different ETFs. But like I said, if we do get a little bit of a pick me up, a little bit of a bid on buying, then we could see kind of I would say that downward slope flatline a little bit, or at least decrease in the acceleration downwards. Right, the slope is very high right now. I'm kind of hoping that we kind of smooth out that curve, as Chris just showed there. Uh, Next, let's touch on oil. You could see oil dip down below uh, 85 area. Right now, it's around what, 80, I think, something like that. Can't really show me for some reason. It's like well, yeah, 80, just around 79.35 or so. So that's interesting. Was something that is, like I said, not unexpected. Oil's been in a downtrend since we hit that 123 area. Not surprising. It's good for inflation that's down, but as we've seen with the August print that came out a couple weeks ago, inflation is still holding up, and that's not only because oil slash gas prices, but because we've seen a massive, increase in housing prices over the last few years. Obviously, groceries are high. We've got car prices as well that are very high, and of course, they're retreating, but not to the extent and not in as rapid pace as I guess the Fed would like, right? And that's very important. Inflation is crushing. Inflation is one of those things that you can't just turn back time on because it's always there. It's always there. All we can do is decrease it and control it. That's why the Fed's mandate has always been 2 to 3%. That's healthy for monetary policy. Anytime you get beyond that, double or triple that, like we've seen with 9% inflation prior, uh, that's horrible. You can't, inflation is not one of those things that um, it in other words, you can't go it's always there. People are like, oh, we have negative inflation. No, you can't have negative inflation. That's called deflation, and that has its own problem. But we're not in a deflationary environment. um, Inflation is either there or it's there significantly, and of course this year we've seen it present itself in many aspects of our lives significantly. So it's always there. And, we've seen, for those of you that are a little bit older, prices of everything go up, but they don't go back down. Right. So if you're buying just giving an example here, a bag of milk for or a carton of milk for $4, let's say. Now, if it was $3 before, and let's just say inflation comes down. Okay, and we're back in 5% annualized range. Still high, but not nowhere near 9%, right? So we're back to 5%. What do you think happens with that carton of milk? Do you think carton of milk will go back to $3.50? Hell no. It's gonna stay there. That's the new normal. So this is the problem with inflation, right? Once prices for things like groceries, for things like consumables, for things like you know, pretty much everything on the board, this very rarely goes down. We've seen almost all aspects of spending go up, whether it's you know people travel, people purchasing uh, consumer discretionary things that they want and not necessarily needs. But we've also seen things that they need go up. We've seen grocery items. You need water. You need food. You need you want to go eat out somewhere. It's how it is, right? It's ridiculous, right? And Nick, I just seen in the comments here, he's like a bag of milk. Excuse me, sorry, he's like a bag of milk. Well, yeah, I know. I believe it or not, for those of you that are not Canadian or Ontario residents, we actually get you can buy cartons, but we actually get bags of milk. Like, I don't know how to explain it to you visually, but we do get bags of milk. So yeah, that was not an error on my part. We literally do get bags of milk, but then I quickly switched it to carton because maybe most of the world has no idea what the hell a bag of milk is. Uh, don't worry, it's not like directly. You don't take you don't milk the cow and put in like a plastic bag yourself. It's literally packaged. It's packaged. It's there. It's like comes in 3 bags. I don't know. It's hard to explain it to you, but it's not as absurd as it sounds. All right, but moving on. Yeah, not surprised with oil. And in fact, I mentioned I'm a bit bummed out because I didn't take a short on oil. I had considered it the last couple of weeks, but then I didn't take it. It's one of those situations where I was like, I wasn't confident enough because of the rate decisions and the US dollar I thought was going to maybe weaken. And I mentioned before there's a bit of an inverse correlation between the two, but that didn't pan out, and I never shorted it, and to my dismay. But hey, that goes to show you it happens. You're going to miss out on some moves, and for transparency, I did miss out on the short on oil. Luckily, I didn't go long. Right, that would super suck. But here we are as well now on gold. Gold prices have also retreated. Like I said, we continue to remain in a sell everything kind of environment. Gold has not been acting as a inflationary hedge or hedge against anything. So yuck, I'm not touching that. I don't like it. Uh, it's a waste of money, kind of putting it in there again, unless you're betting against it, which has probably worked out well for you if you went short. All right. Next, Chris, I think we have BTC Crypto. Yeah, this is holding up still, but it's actually trickling lower. If you can see the real-time pricing right now, it's about 18,500 or so. Not very bullish at all. The fact that it's holding this area is good, but a break below 18,000, oof, that can that can spell disaster. I said that before, so keep an eye on this. The moment we see something below 18,000, I'm sure people's stop losses are going to be taken out. People will be panic selling, so on and so forth. So I wouldn't be surprised if we get a further meltdown if crypto goes below 18 area. All right, something to keep in mind. I have no position, um, as you most likely know. All right, so moving on, I have not necessarily planned any specific trades for this week, um, but we did take Google last week. We have some long positions, and of course, for those that are in elite, they have access to a whole list of stocks that we will be uh, looking into and hopefully scaling in as per the tiered buy list. But for those of you that are not in elite and are thinking, Riz, well, what do you like? What do you like at these levels? Well, my answer is usually pretty simple. It's nothing crazy. It's nothing special. It's pretty much a combination of the large caps. Think about things like Microsoft, Google, I've already mentioned, Amazon, I don't like just yet at this price point, but maybe around $100. But really, if you look at things like Berkshire Hathaway, I mean, that will also depend on kind of how well the broader markets do. Uh, BRK will be the one. Yeah. Yeah. BRKB. No. BRK.B. There you go. That's the Canadian hedged one. Yeah, that which is pretty crazy because I literally talked about that. Yeah, there you go. But yeah, so we got Berkshire Hathaway very much at the support area. Again, that's Warren Buffett. One of the big risks with that is, God forbid, if something happens to Warren Buffett. I mean, he's almost 100 years old. I wouldn't be surprised if it impacts the stock price, right? So that's something to be concerned about. I really like some big opportunities in there's semiconductors, AMD, Nvidia, as I mentioned earlier, they're great. Some of my favorite semiconductors, if you really feel confident about that. But yeah, those are some of the key things you want to look at. Some stocks there. But again, do your due diligence. If you're not an elite, well, I'm not going to handhold it. You're not really going to get real time entries on our end here, just via YouTube. So something to keep in mind. With that said, we can open it up to questions and anything people want to talk about here.
Riz, I did get one question that came through from Jeffrey. He said he wasn't sure if he's going to make it to webinar tonight, but he wanted to hear our thoughts on Intel at these prices, essentially at the 2016 lows, thinking about a medium-term hold recovery play in the chip space. So he'd love your opinion on that one.
Yep. So yeah, Intel is another one, obviously very beaten down, something that's fallen out of favor. With investors for many reasons, delays in their chipsets, falling behind the curve in innovation and technology from their competitors. AMD and Nvidia have really been eating their lunch in many ways, but they're not. It's not like they're going under or anything like that. I feel like this is a great turnaround play, and like Jeffrey said, a medium long term play, able to carry. Those are the things you want to look at. I would definitely consider this for a turnaround play. It's very much undervalued, but Intel does have a lot of work to do. Management has a lot of work to do to catch up and kind of gain back some trust with investors, and hopefully gain back some market share, and hopefully continue to innovate and be the leader that it once was. Because Intel, is really what you think about or used to think about when you thought semiconductor chipsets, processors, right, for computers. But obviously, the last few years it's changed, and a lot of that blame is squarely on management. Management has been asleep at the wheel. They had a bean counter as the CEO, uh, which what do I mean by that? It's an accountant guy, CFO became the CEO. That's not a good look, because you need an innovator, you need a visionary, right? You need someone who's passionate about the space, and it very much seems like he's not. He's just going by the numbers, and for many reasons, management has really failed uh, the company and investors. So I'm hoping that turns around. But yes, it's a good stock, good company for a turnaround play. Obviously, I wouldn't go too heavy on it, but yes, you have my blessing. Let's see here. We got some more questions. Lloyd asks, if when the market goes lower, fear will continue to build. What are some signs that market may have reached the bottom and might see a reversal? Not saying the bear market will be over, but at least another rally. So this is one is very difficult. We've seen, look at in July, just last month. You would think from the start of July, that massive run up, to 4,300, that the bear market was over. We're now in a bull market. We're now going to the moon, right? That's what you would think. But then you have a complete and utter reversal, you know, uh, literally a couple months later, from middle of August to now. That's that's brutal. That's brutal. And even in that pullback, we see a little bit of a rise, in the middle of that. And it was, I think, the start of September, something like that. So we will have these little, you know, bear market mini rallies. So I wouldn't be surprised if we see one a little bit, but I feel that there is further downside because, as usual, inflation is turning out to be a bigger, more stickier metric. It's not something that's gotten in control as we had thought, right? As per the recent print. And of course, the Federal Reserve is now having to continually be aggressive, whereas the market was hoping that if inflation came below expectations, let's say below 8% annualized, that would give the Fed some reason to slow down. But that hasn't been the case. And as a result, they've done a 75 basis point hike. Maybe they would have planned and tried to be a little bit lower. But guess what? Lower on the rate hikes. But I don't think that's going to happen just yet. I believe we have one more meeting or two more meetings, Fed meetings for the year left. So it remains to be seen. But I feel like I'm hoping inflation comes down. I think we should see it trickle lower. It's just not happening at the rate we wanted and investors wanted. So it's something that I feel like is very hard to kind of gauge. But keep an eye on the 3600. Like I said, for now, it's always a moving goalpost with markets. It's never as simple as look at 3,300 and then from 3,300 it will go up. Like I hate those kinds of bullshit analysis that some of these idiots do online. There's no way to determine just that. If we see below 3,600, look out below because it's no man land. We haven't been there. We haven't really had to go through this significant drop. Where are we at, Chris, right now? I think nearly just negative 18% from highs, somewhere like that. Whoa, sorry, 23. Wow, jeez, I was quite a bit off, but yeah, 23%. So if the market, if it goes below 3,600, we'll be below 25% or so from the highs. Usually we can see in the last many decades, average drop is probably about 30 to 35% from peak, right? And of course, I have those levels for us in elite in the game plan. Okay, so not a direct answer for you because I don't think anyone can answer this and be honest without bullshitting. But something to think about. It's really a trying time for the economy, for the markets, for confidence, for the average person, even. Right, it's been a rough year. Moving on. Panos asks, in case of a relief rally, do we lock small profits or wait for the recovery? Yes. So I will, of course, guide as things go because I'll be looking at market structure. I'll be looking at, economic indicators, Fed, macro. I'll be looking at, price action. And I will guide, of course, for those that are an elite on whether we want to take some off, take some gains. But generally speaking, yes, I don't think we're in an environment where we are completely back to normal and inflation is, a foregone conclusion of 2% because that's not the case. It's still there, it's still biting at the heels of everything we buy. It's still impacting everything, and it's nowhere near the optimal zone of 2 to 3% annualized. So I continue to feel that until we get a better signal where we see rate inflation come down below 8%, start moving towards 7% annualized, then 6, then the Fed will be like, okay, it's coming down. We could slow down the rate hikes. Then the market will be like, okay, that's good. The Fed isn't continuing to take the air out of the economy, isn't continuing to take the oxygen out of this thing. So that's good. But if it doesn't happen, which is what we've seen, that's why the market's selling off because the Fed has no choice but to continue to raise rates. And what does that do? That slows down spending, that slows down purchasing, that slows down the economy, and as a result, the stock market, right? So that's kind of the train of thought that's going on. Uh, but yes, until we get that all clear, we will continue to be more in a sell the rally type of mode. Next question, Nick asks, thought on AMD. It looks like it's some good support. Yes, I have a position in it. It's, again, broken below that 73 area support, long-term support for the last over a year now. So that's not ideal. But then again, everything's getting sold off, especially semiconductors. Semiconductors can be a leading sector for the market. So if usually we see semiconductors rally, and then that will kind of precede, uh, be preceded by a market rally. And if on the flip side, if we see semiconductors selling off, that tells you we could potentially see the market continuing lower. Again, it's not always correct, but there is that bit of a correlation there. So something to consider. Yes, if you're bullish on it, I don't think it's a bad idea to start getting in. You'll definitely have a better entry than I did, for sure. And it's very much oversold. And of course, keep in mind that pretty much all these companies um, are very much going along with market sentiment, market pricing structure. Okay, Ricardo says, yeah, he's just sharing his insights here. But yeah, so far, any other questions? Hopefully, Nick, that kind of gives you some insight on AMD. Um, any other topics, questions coming in? I do see a couple questions being typed here. David asks, is Costco or Walmart a good indicator for consumer sector when inflation begins to fall? Yes, we will be keeping an eye on inventory levels. That's what matters. We've seen inventory levels increase for pretty much all retail sector, whether it's Target, Costco, Walmart, so on and so forth, right? Inventories are high because we've seen less purchases based on historical numbers, right? We know that the average consumer is getting squeezed, and as a result, they're buying less purchasing, increased buildup in inventory, right? That's more products sitting on the shelves. So that's not a good thing. Uh, Dylan asked, can we look at Microsoft? Of course, Microsoft, fantastic company. I mentioned it earlier that this is one of those companies maybe you want to consider long. It's obviously, um, you know, hint hint. It's on the tiered buy list as well, and of course, I believe well below the area of entry, and of course oversold as well. So not a bad idea if you have that cash to allocate and follow the plan on this. It'd be very interesting to see how the market goes. Um, but yeah, and Panos just timed in and he said, what do we see at 35, 34, 50 level or below on the SPX? Um, very much, the next key area. If we do go lower, that's fine. Everyone's going to be obviously upset if they have long positions, but we're able to hedge. We're able to do our best to offset or mitigate some of those drawdowns, right? And ease the blow. And of course, not only that, if we have some cash on hand, which we should, everyone should, you can also then average it. So it's like trying to extract short-term gains even on the downside with the hopes that the positions we have, the amazing stocks, companies that we hold and bought during this this downward move will eventually serve us well in the long term and provide us with outsized returns going forward. So we're trying to not only get the long term right, but of course the short term as well to offset the drawdowns, right? So I never kind of operate on a this is where it's going to go type of scenario. I look at it as a moving goalpost. As I said before, it's always the market is always in flux, always moving. There's always new information, always new things happening. There's always a wall of worry that the market needs to get over and kind of price in. And that's no different than now, right? In 2008, it was different metrics. Inflation wasn't necessarily an issue, but it was, mortgage-backed securities, and it was, consumer credit and overspending and financial leverage. Those were the issues back then, right? This market, this environment is a different wall of worry. This is a different problem. This is inflation. This is, you know, uh, overpricing of different assets, bubble, so to speak, in different asset classes. We've seen definitely higher interest rates, a very different interest rate environment to before. So that's why I very much do not like to draw comparisons, direct comparisons to prior, because every market environment, from one year to the next, from one decade to the next, is different. It's its own different animal. There are some parallels, as they say. History doesn't repeat, but it does rhyme, right? So it's important to be aware of the historicals, be aware of the past, but also be very much focused on the current situation we are in right now and take it as its own animal, so to speak. I believe there's another question coming in. One second for Dylan. And then once Dylan's done, I think we could probably wrap it up. I think that's a good amount of questions here. J&J, this is another one, great company. Really like the stock. It's holding up really well, has a lot of relative strength. I'm not going to break down what relative strength is, but it's holding up well as the market bleeds. This thing is, as you can see, not only holding up, but it's also kind of picked up a little bit over the last couple of days of trading. So this is another great company, another solid stock. I haven't really gone in and averaged in or even bought any yet, simply because I'm waiting to see if it can break below the 162 area. It hasn't. It's been holding that. So that's good for those that have a position. But for me, someone who doesn't have a position, who wants to take a position, I would love to get in below 162. Um, but even if you do get in now, it's not too bad, so long as you have the time frame for it, right? So long as you feel like you're not going to have a very near stop loss, you're not going to be panic selling. Absolutely, you can't go wrong with this. This is one of those companies that no matter what, no matter how much people make, no matter what inflation is, no matter how much wealth they have or how much they do, uh, uh, they, they're going to buy stuff that is very much under the wheelhouse of J&J, because they hold so many different household products. And of course, another one to think about is Procter and Gamble. This one actually is probably at a better buy point. PG, right? Take a look at this, right? This one is, I feel like, a better entry for a starter. Again, no position yet, and I will provide some uh, guidance and updates to when I do take a position, if I do. But right now, no position. And this is another one, right? J&J, Procter and Gamble, love them, love them. You'll get some dividend as well. And in fact, I believe you might be able to, Chris, if you can put J&J. Type it in and then just scroll down. I want to see if they have a CDR on it. Scroll down, type in J&J and then space and then CDR to try that. I can't remember if they do. So we know IBM. Okay, maybe not. No. Okay, that's fine. I thought I'd figure it out. But yeah, for those of you that missed the start of the video, check out my video before this one. You will see the it's like a 7-minute video talking about Canadian CDRs. Definitely check that out if you're Canadian. All right. Yeah, David, you're gonna want to watch that video. It's gonna do everything you want to know. It's highly recommended. If you're Canadian and you don't watch that video, holy crap, you are missing out on some tremendous opportunities, and you will thank me. You will thank yourself. Nick, you can find it on the YouTube page. You'll find it on my YouTube page, the most recent video. So check that out if you're Canadian. Your kids, your grandkids have the opportunity to change their lives, because you will be able to get exposure to some of these amazing companies, like I mentioned, Google, AMD, Microsoft, Amazon, so on and so forth, without having to get clobbered on the exchange and lose your buying power, not to mention any fees. So check that out. Again, everyone, fantastic. Love the attendance. Thank you so much for joining. Whether you're elite members or subscribers, please hit that thumbs up button. It helps a lot. Comment. Really appreciate your support. Be well. Do not panic. Stay the course. There's some tremendous opportunities, as those of you in elite know. And guess what? We will be there to capitalize on them, because this is where the money is made, in these kinds of markets. I've made most of my money, most of my wealth during times like these, whether it's 2008, 2009, whether it's 2020, and whether it's 2022 right now. Okay, so you can be assured that my style, my approach to markets has stood the test of time, has stood varying different market environments, unlike some of the new traders that have barely seen anything else besides, you know, uh, 2020 market environment. So yes, keep it locked. Thanks for your support. Be well and have a great rest of the weekend. Cheers.